All right.
Hello, Culture Matters Podcast. I am excited to introduce you to our guest. Before I do that, here's a quote just for this episode. From my experience, the best advisors help in three ways: encourage you to look at the problem or opportunity from multiple angles, help you balance the tug of the short term with important long term priorities, and ask the tough questions you need to know to reach the best solution. Margot Georgiadis. Our guest today does all of the above for me and many others, and so much more. They're a great friend of Culture Matters, and I'm so excited to introduce you all to for about to be a 40-year anniversary coming up very soon, advising in the legal and tax value ramifications, all things business around mergers, acquisitions, corporate law, partnerships, estate planning, so much more.
Oh
I
my
met
God.
this person. I got more to say. I met this person, somebody very important to me that I consider a great mentor, and they and their organization has been amazing, and they are one of the founding principles of Lex Nova, or new law, with a mantra: character matters. So there's no better person to have on the Culture Matters show, Culture Matters podcast, than the one and only Peter Spirgel. I almost forgot to introduce your name there at the end. Thanks for coming on the show.
How you doing?
Better now. I'd love firstly, your opinion on this quote here, where they talked about, because as an advisor to so many business owners over the decades here, You know, what do you think about that? Encourage you to look at the problem or opportunity from multiple angles. Help you balance the tug of short and with important long-term priorities, and ask the tough questions.
I would say this, we all have advisors in our lives, right? People that are subordinates and superiors. And I've always asked one thing of them is not tell me what I want to hear, but what I should hear. And I think sometimes um, that I clearly apply that to my business and giving advice to clients. There have been instances where the message to them is not necessarily one they want to hear. Uh, may make them self-examine themselves, or frankly could even lead to termination of relationship. And a lot of advisors won't do that for fear of losing the client. But I feel that that is something I would want in someone giving me advice, working for me, um, whether it be, hey, you're just being a jerk today, or no, that makes no sense. I think that solution is stupid. Um, you don't have to can't, I believe that ultimately that's what um I'm being engaged for,
Hmm.
not to tell the person what they want to hear, but what they should be hearing.
What are some of the struggles? Because we have a lot of listeners that are entrepreneurs. They've started businesses. They're in the muck of it. Those early struggles that they may not even recognize that you've seen throughout your career that entrepreneurs face.
Well, they also often don't surround themselves with critical thinkers, right? Because it's more work for them, right? If you have someone who agrees with you or just does everything you at your direction, it's a it's a very easy, smooth process, and entrepreneurs tend to have very little time. They're always pushed, and so to instead have people who are going to question and ask, critically think, um, maybe slow down your process sometimes. We've had that, right? You know, you're you you're focused, you want to get something done, and we'll have a call and I'll say, whoa, slow down. No, you're not ready for that. Or this is, you're at step, you want to jump to step 12, but we're still on step 3. And often that's very frustrating for the entrepreneur, but necessary. Not always. And listen, you want people who are on your team, right? That are team players, but you also want people who will, who will, who are critical thinkers, who, who maybe make you defend a decision, right?
Mm.
Not just accept the decision.
What value can come to the entrepreneur from being in a position to defend their position or defend their decision?
It,
What
it
value
lead,
can come to them?
it leads to a better decision often. I mean, listen, you're going to have, as an entrepreneur, you're going to have to defend your decisions all the time, or justify them, or sell them, which is another way to say justify. And if you don't want your first instance of having to do that to be someone on the external to your organization, right? You want to,
Mm.
you want to make sure that you're ready for that. And the only way to get ready for that is to having to defend your ideas within your business's ecosystem before you put it on the road, if you will. Take it on the road, I think.
What's most exciting about small business to you?
The entrepreneur is why I chose to represent um, privately held, as opposed to um, more geared towards larger publicly held, because the entrepreneur, it's their money, it's their vision, it's their passion. When necessarily, when organizations grow, they tend to have people in positions that are no longer, it's their money, it's their job. And the politics, the the dynamics of the organizational behavior uh starts to creep into the decision, and they're not necessarily making the right decisions.
Hmm. Early on, did you have an epiphany, or was it outside influence that led to the idea that studying tax would be very valuable from an advisory perspective to this to the legal world?
I thought I was going to be an accountant. My father was an accountant. I was an accountant. I have my accounting degree. um I worked for an accounting firm uh during um my undergraduate years, and even worked for one for my first year in law school, because I really, it was something that I understood. It came easy to me. I liked it. I liked it. Um, but I found that certain aspects of the accounting world, um, mostly the auditing aspects, were not what I wanted to do. I saw them more, I wanted to be more creative. And people don't equate tax with creativity typically, but I wanted to, I saw the the structure of the transaction and that type of advice as the more creative outlet for me. And then, as when I worked for a major national accounting firm, I saw the role of the tax lawyer versus the accountant. And I said, okay, I want to do the tax lawyer role.
What were some of the stark, glaring differences?
They just they were less on the documentation of the reporting of the transaction, and not exclusively. Accountants have clearly do a lot of this also, but they more in the consulting aspect of it, right? How do we structure this transaction or position the enterprise towards your ultimate goal, um, and do it in the most efficient way. Um, I will tell you before when you asked me what was my epiphany was, that's a little different than, the large dealing with entrepreneurs versus the like middle managers. Um, the epiphany there was that middle managers often make decisions from a internal political matrix, as opposed to necessarily what's best for ultimately business decision.
Mm.
Entrepreneurs, when it's their money, typically they'll be more focused on, they don't care about the politics, right? They're going to do what makes the most business sense to them. Um, on the tax side, unfortunately, we have an internal revenue code and a tax scheme and regulations and laws that 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 are designed to socially engineer a lot of decisions, right? And
Mm.
what
Yep.
that created is that the form of many transactions, rather than the substance of the transaction, the form often dictates a lot of the consequences, the economic consequences from a tax standpoint. It shouldn't be that way, right? If entrepreneurs selling their business and they've agreed with the purchaser on a price and how the price is going to be paid, you would think it's done, right? They'll be taxed according to what their gain is on that price. It doesn't work that way. Our tax system is so um, socially engineered that often the form of that transaction can alter the tax consequences and the net return to the entrepreneur drastically. Shouldn't be that way, but I
Really?
guess I should be happy it is that way because it keeps me in business.
When you say socially engineered, what do you mean by that?
The easiest way I can do is for most of the listeners is the Congress in its infinite wisdom decided that home ownership is a good thing for the American society, right? So they they go into what is our tax code, which is designed to raise revenue for the United States for its essential functions, and they put in provisions that favor, give a deduction in this case to people who own a home versus people that rent the home. So you and I could be in the same home, rent it, you could rent it, I could own it, and my tax will be lower because they wanted to encourage me to own it versus you to rent it. Now you could look back in that and say, how does that, should, if they wanted to encourage home ownership, should they be doing it through the the Internal Revenue Code designed to raise money for the government's critical functions? I would argue no, but that's the way they do it. And every time they tinker with it, it gets more socially engineered.
Mm.
It's no different on the business tax provisions.
How important how important or what value comes from a business owner taking tax seriously in the sense of paying attention to it, having the right and having advisors to pay attention to it?
It's not only tax, it's it's the one of the big mistakes an entrepreneur makes is they don't contemplate their exit, right? It's like, I'm not a family lawyer, exclamation point, not a family lawyer. And I never, that was one area of law that had no appeal to me. I didn't, but when a family lawyer hears about a couple getting married, the first thing that goes through their mind is, oh, you should have a prenup. And usually the reaction from the couple is visceral. Prenup. They're in love. They can't imagine a situation where that would end. How dare, one side suggests it, often the other side has a very negative reaction. When a business owner is starting a business, the last thing they're thinking about is their sale. I mean, mostly how they're going to sell this business, or when they want to retire, how they going to cash out or transition out, and and often they start thinking about that when they're ready to do it. And for many reasons, that's too late in the game. I mean, they should be thinking about it and managing their balance sheet and income statement, um, with an eye towards ultimately what their transition plan is.
How many years is there an arbitrary, some degree of arbitrariness around how many years to start thinking, dialoguing? Let's say it's someone listening it's been an imperfect road. They've been in business for some time now, and they're thinking, wait, what did he just say? They rewound this.
Right. It's not, it's never, it's never too late. Um, I would just say that getting, thinking about it and, and positioning your company internally for it. And you may not know the form that it is going to take, whether it's going to be a sale to key executives internal, or a sale to a strategic, or a competitor, or just a private equity looking to get into that space, or rolling up other companies in that space, or an IPO. Yeah, whatever the exit is may be totally unclear at the time. But the every business has an exit. The exit may be shutting off the lights and locking the door and walking away, but every business exits. And just like people don't view a marriage as having an exit, whether it be death of a partner or a divorce or whatever, um, they all do. And so thinking about it and viewing, um, your finances that way internally, like saying, hey, someone's going to look at my balance sheet and income statements with a critical eye, right? They're going to be the buyer kicking the tires. What do I want them to look like? And what
Hmm.
and what key, how human capital, where are they in this equation? And what have I done to keep human capital in position so that when I sell it, the human capital just doesn't jump ship?
Why is that important?
Well, because depending upon what the business is, it may not be worth anything if the the key the key resource, the people leave, right, or are not bought into the transition strategy from, you know a standpoint that it's their careers too, right? So that's a, a, a very nerve-wracking subject for employees, right? What do you mean you're talking about your exit? What's going to happen to me? What's going to happen to my job? Being open about that and structuring expectations internally for that will net the entrepreneur a much bigger return, maybe, and more fulfilling return on the exit, by the way.
What, yeah, why?
Many entrepreneurs have a very patriarchal or matriarchal, not to be sexist, view of their key employees, right? Their family, their team members. And if, in a sense, they would like those team members to share in the exit, whether it be, you know, inheriting the business or getting key roles with any person who's acquiring the business. And and often I have entrepreneurs tell me that they want assurances when they're selling their business to an unrelated third party that their employees are going to be protected, right? And because it's an important cultural factor for them. Like, often these people are what created the value for them, right? The success. And so you want to take care of them is often a goal. thinking about that, and there are many structures where um, they can be brought along or rewarded, I think is part of the process. And I like discussing those aspects. I find that very professionally rewarding.
Some found fundamentals that our listeners can think on as far as what ducks they have to have in a row, or whatever saying I can use, right, in to begin presenting to strategic buyers or
Well,
clients.
let me give you an example again that I think is basic but would illustrate it. Early on in my career, I represented a restaurateur, right? He wanted to sell his restaurant. And I said, okay, so what, let me understand what you think this restaurant's worth. Oh, it's worth a lot of money. Very successful. I said, oh, we're great. Let me see your being an accountant by trade. I say, oh, let me see your financial statements. I'll analyze them. And they weren't that fantastic. And he said, well, these are not really my financial statements. I said, what do you mean they're not really your financial statements? He says, well, a restaurant, it's a lot of cash. And I said, so when you go to the third party, you're not going to be selling it to your maitre d', perhaps. You're going to be selling it to this unrelated third party. What are they going to say? They're going to just take your word for it that there's a lot of other stuff. Plus, let's not even bring into the risk, right? The tax risk of something like that. If they're really contemplating their exit strategy out of this as a sale to an unrelated third party, that strategy is not going to be get them the highest valuation, and they just can't restate their books then. That that's a simple, very simplistic
Mhm.
way. In the corporate world, you'll hear venture funds when they're looking at a target will do what's called a quality of earnings um, analysis. And sometimes an entrepreneur says, what do you mean a quality of earnings? A dollar is a dollar. And I said, no, that's not what they're talking about. In many privately held businesses, there's expenses or income that are not they're extraordinary, right? And so when they look at a quality of earnings analysis, they're backing out those items to get to what the core performance of the business is. So I would encourage entrepreneurs to do quality of earnings analysis um, on a fairly regular basis, right? They may be putting through quasi-personal expenses or have extraordinary, relationships that are generating sales but wouldn't to a third party. Say, okay, that's not part of my business's real value or expense structure, right? They have their relatives on the payroll for, higher than market because they're taking care of them. Well, that's, you know, understating their income.
Wow. What about uh, what about learning? So actually, yeah, qualities of learning. Because recently I saw a statistic. I did a monologue on this that it said that learning cultures were 92% more likely to innovate. Was the
Interesting.
yeah? So in your experience interacting with all these different private companies. Have you come across any cultures that you consider learning cultures, or maybe even a different, you know, way of saying that, or is it some elements of like innovative cultures?
Yeah, well, I mean, I think any business that rests on its laurels is not thinking about what's what external factors or internal factors are going to change my business, right? You know, we all learned in early on in business school, they gave you the buggy whip company, except, analogy, right? The company that made buggy whips thought, hey, I'm making buggy whips. I make real great buggy whips and making a lot of money at it. And if they didn't plan for the automobile or see that coming, they went out of business, right? Because no one's buying buggy whips anymore. Um, that pace of change
Mm.
continues to accelerate in our business. So if the entrepreneur is not looking about what external factor is going to change my business, change it up. You know, what what is artificial intelligence or other technology or people that are going to move into my market? How is it going to change my business model? And and they aren't planning for it and learning, be trying to keep ahead of it. Then those they're they're gonna they're gonna
Mm.
they're gonna be a buggy whip company.
Some of the core values of leaders that you've worked with over your tenure that were at the helm of these private businesses, of the most successful businesses, what would you, if there are core values that come to mind or at character attributes?
All in, right? There are entrepreneurs that are just all in, and entrepreneurs that are never satisfied, businesses that are never satisfied with the status quo. They're constantly looking to innovate, constantly looking to what's next, as opposed to being externally forced to innovate or consider what's next, right?
Mm.
Um, you know, the the if if you look at the the electric car market right now, we hear about the external risks that a Chinese electric car can be sold in this United States if we didn't have government intervention for half of what Tesla can make it for in the United States. And what if you're not planning for these things, or saying, hey, I'm making electric cars now and I'm thinking that's the new technology. Just today I read that there's a new battery coming out, right? Or there's hydrogen cars, or there's who knows what the next thing is. If you're just resting on your laurels and you're going to be, if Ford says I'm going to make gas cars forever, they're going to be the next buggy whip company, right? And
Mm.
good entrepreneurs know that and are constantly reinventing themselves, reinventing the business, or knowing when to sell, right? Or knowing when to sell and move on to the next one. Most entrepreneurs are serial entrepreneurs. They can they can take a business to a certain spot. They recognize that the future growth of that business is enhanced by a exit at this point to a different platform, and they may cash out or may take an equity stake in the new venture, but often they don't go get a margarita and sit in a beach chair for the rest of their lives. They're they're they already have in their mind what's their next what's the next challenge. Those are the ones that typically are the most successful.
If someone's thinking, well, no, I'm thinking about my margarita right now. What do you say to that?
Hey, there's nothing wrong with a margarita. and and that's all well and good. I'm not advocating for everybody sits in their chair and works their head off until they, pass out and kid dies. That's not that but I do think you have to be all in when you're in. And there's nothing wrong with saying I'm all in into a certain point and then I want to reap the rewards of my all in, right? And and I guess a weakness of that mentality is often when you're all in, um, your business is not the all. And entrepreneurs that understand that, they have there's life outside their business also, and that can achieve from a priority standpoint and a value standpoint a balance, tend to be more happy. That's not always necessarily more money, but you know, money can't buy you happiness. So, entrepreneurs that that understand that they need to make time for their interpersonal relationships outside of the business, whether it be kids, spouse, friends, family, and have a balance. They can't just be all business all the time. They they may make more money being all business all the time, and there may be short periods where they have to do that for survival. But long term, their self-actualization will be a lot better if they've learned that there's life outside of the office or the factory.
Lex Nova, new law. What does that mean?
It's funny, law firms, going into the profession, I've been in it now for, like you said, almost 40 years. Lawyers who practiced in law firms exclusively practiced in firms that were named after a dead or some key active partners, and not because they had big egos, which they do, but because the law required it, and some states still require it. They weren't allowed to have trade names, if you will, like Lex Nova. Until 10 years ago, you couldn't have had a name like that. You would have had to use the name of either an active or a deceased former partner as your name. And you saw some law firms that had, 10 names in their in their name. And then, law has started to catch up with reality, and when we formed Lex Nova, we 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 didn't want it to be about a particular person. We wanted it to be um really being about character, and it was a group of people who were aligned in their um approach to the practice, that were all successful professionally, not at this, and really felt that they were going to try to have a culture where character really was important. Listen, ethically, we're supposed to zealously represent our clients and put our clients first, and I think law um, gets a bad rap often, um, when in many ways it does do that. It advocates for their clients, and that's a necessary function of our society. But there's ways of conducting yourself and operating, um, where we felt that character mattered, could was a could make a big difference.
Mm.
And so
For
that
the,
was
go ahead.
that was our thought process there, and we took it very seriously. We just
For
didn't
the
want to be.
for the apprehensive uh, founder who's yet to build that board of advisors, that Swiss Army knife of tax, legal, mentor, all, and for the financial investment is a part of that apprehension. What's your strongest argument for that? Because I
I
don't
just
think you work for free.
no 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 one no one works for free, um, for long anyway. um, I just think that you can't have, um, as it's more work, but you can't have too many advisors. And again, go back to where we started this. An advisor is not somebody who's going to be a cheerleader that says, "Great," a yes person. An advisor is another critical thinker. And they're all different types. There are advisors that are industry specific, that know your business, maybe have exited from a similar business, and nobody, no man is an island. Nobody has all the best ideas. The more people you can tap one way or another for critical thinking and ideas, the I think the better the decision. Now, to an entrepreneur, you have to contrast that with um, making decisions with less than perfect information, right? You can't get frozen by indecision. Good entrepreneurs often have to trust their gut and make decisions with less than perfect information. And by definition, are making decisions that have risks and rewards associated with them. And I think a defining characteristic of an entrepreneur is they're risk takers, right? You hear, an entrepreneur that's perpetually in the news now, Elon Musk, often risked it all, on the next venture, right? If the SpaceX rocket, the last one that he put up there that finally was successful, he'll tell you that I've read that if that wasn't successful, he was out. He was destroyed, right? How many people would do that if they had the kind of money he had, right? He could do whatever he wants. Money was no object. He could unlimited margaritas. um, Yet the characteristic of that entrepreneur was he was willing to risk it, that comfort level on the next venture. And uh, so yes, you want as much full information and perspectives as possible, but you also have to balance that as an entrepreneur. Good entrepreneurs know when they have to just bite the bullet and make a decision with less than perfect information that many times will be wrong, and not let the failures freeze the future decision making process, right?
Mm.
You got to have a very short memory on the failures to be good.
In closing, how can people contact Lex Nova, yourself? They want to start a conversation, potentially bring you into their endeavors, their business. What's the fastest way to get in contact with you?
Like any business now, we're on the web, right? lexnovalaw.com will link to our bios and our contact information, and you know, to reach out through an email or um, is the easiest way. Um, I would say that they can get in touch with us. I mean, we're not in the consumer-based legal area where we advertise or anything like that. Most of our clients come from other clients or other business advisors that are part of the advisory team and recognize a need at the business level for maybe our expertise.
Mm.
Uh,
Peter, thank you for coming on the show. It's been a great honor and fun. I can't wait till next time. If you're listening to this
Next.
episode, yeah, I know you love this so much. Millions and millions of people will be watching this.
Oh, great. At least it's only audio, right?
Well, no, we'll put it on YouTube, with your
Oh,
permission,
good.
of course,
Great.
Yeah, we got everybody from my mom to we'll have my neighbors on there soon.
Oh my
Thank you so much. Thank
God.
you all for listening to this episode of the Culture Runners podcast. I tell you, Peter and the team at Lex Nova, you've heard some of them on the show, like Shamwanya, who I've met through Peter, and many of the other great connections and colleagues. Pay very close attention. Go listen to their episodes, and I would challenge you to reach out and see if you make the fit for the right type of uh, client for Lex Nova and everything that Peter's doing. And we will see you next time on the Culture Matters podcast. Thanks for coming on.